Hey everyone, welcome back to the channel. Today I'll be diving into a stock that's been flying under the radar but might just be a hidden gem. StoneCo, ticker STNE. If you haven't heard about it, StoneCo is a Brazilian fintech company shaking up the payment space. Now the stock is down about 90% from its all-time highs a few years back. But there's a compelling story here about growth, value, and yes, some risk we need to talk about it. In this deep dive, I'll break down the STNE could be a smart buy right now and what could go wrong. Stick around and let's get into it. Okay, let's start with the good stuff. Why StoneCo might be worth your attention. First off, this company's fundamentals are seriously impressive. Over the last 5 years, StoneCo earnings have shot up nearly 190%, and its revenue increased 450%. While the stock price has tanked since 2021 peak, the business itself has been growing like crazy. They are a leader in Brazilian digital payment space, helping small and medium-sized business process payments, manage finances, and even access credits. Think of them as a Brazilian version of Square or PayPal, but tailored to a fast-growing emerging market. Now, here is what gets interesting for investor. STNE is trading at a forward P ratio around 9 as of early 2025. That's dirt cheap compared to the tech sector average around 29. Plus, its PEG ratio, which factors in growth, is a tiny 0.4. For context, anything under 1 is often seen as undervalued. So you're getting a growth company at a bargain basement price. Posts on X have even pointed out this disconnect, which some calling it a potential rocket ship if the market starts pricing in that growth. Let's zoom out a bit. Brazilian economy is a massive, one of the largest in the world, and it's digitalizing fast. Cash is still king there, but digital payments are taking off, especially among small businesses. Stonk is perfectly positioned to ride this wave. They have got a sleek platform, a focus on customer service, and a growing suite of financial tools. Plus, they have been expanding beyond payments into software and lending, diversifying their revenue streams. Analysts aren't sleeping on this either. While it's got Zach's rank number 5, a strong sell, that's more about short-term trends. Long-term, the growth story is what matters. And get this, the stock's up nearly 20% in the past month as of March 2025, outpacing the S&P 500. That's a sign momentum might be shifting. If the market wakes up to StoneCo potential, we could see a serious re-rating. Okay, now let's flip the coin. No stock is a slam dunk, and the STNE has some real risk. You need to wait. First, let's address the elephant in the room. That 90% off from its highs back in 2021, STN hit over $90 a share. Today, it's hovering around 10. That's a brutal decline, and it's left a lot of shareholders underwater. Over the past year alone, it's down 39%, while the broader market is up 26%. Why? Partially because of the scandal in 2021 involving bad loans in its credit business, which spooked investors. Even though they have cleaned up that damaged the confidence. Next, Brazil itself. It's an emerging market, which means higher rewards but also high risk. Inflation, currency swings, and political instability are all in play. President Trump's recent tariff threats, as of March 2025, could ripple globally, and Brazil's export-heavy economy might feel the heat. If the Brazilian real weakens or growth slows, StoneCo customers could tighten their belts, hitting their revenue. The fintech space isn't exactly empty. StoneCo up against big players like PagSeguro and even global giants dipping into Brazil. If competition cut prices or roll out better tech, StoneCo could lose market share. They have got a strong moat with their customer focus, but it's not invincible. Finally, timing's tricky. Even if StoneCo is a steal, the market doesn't always agree right away. Wall Street's been obsessed with AI and US tech lately, so Brazilian fintech may stay ignored for a while. Plus, with US bonds yield creeping up, the 10-year at 4.15%, some investor might prefer safer bets. So where does this leave us? StoneCo's fascinating play. On one hand, you have got explosive growth, a dirt cheap valuation, and a foothold in a massive digitalizing market. On the other hand, there is ugly stock chart, Brazil's wild card status, and some fierce competition. For me, it's a contrarian bet, the kind of stock that could 2 or 3x, but you have got to stomach the turbulence. The way I'm playing this is with the long outdated options, 2026 or 2027. What do you think? Are you buying StoneCo at these levels or it's too risky for you? Drop your thoughts in the comments. I would love to hear from you. If you found this breakdown helpful, smash that like button, subscribe for more stock deep dives, and ring the bell so you don't miss the next one. Thanks for watching, and I'll catch you in the next video.